please. There are some slight difficulties. It gives me great pleasure to welcome you all to the 4th study circle meeting. And the topic selected is something which affects all of us. And we have a great speaker. Recent amendments, notifications, circulars, and recommendations under the GST law. CA Rajiv Luthia is one of the best suited persons to take us through these developments. So I thereby call upon my president, Mr. Alok Mehta, to welcome Rajiv sir.
Thank you, Parth. Good evening to all of you. I recognize the presence of Shri Sunil Kushnani, Vice President, Judicial IT Committee Head, my Joint Secretary Shri Parth Badeka, and Alok Singh, our committee member. Before we start further, there's some development I just need to highlight you. That first of all, that our 46 RRC at Indore is already full. We got the overwhelming response, and as a result of which, we need to stop the enrollment. So we are just waiting if we can get the additional room so that we can accommodate the people in waiting list. So first time in the history of GSTPAM that RRC got full even much before the due date. So thank you all of you for your response, for your support to all of us. Number one. Number two, the postgraduate diploma course with the Maharashtra National University has already started. We are the first in GSTPAM that we have attended. This course has been attended by the MNLU. Thank you to the MNLU for their support and all. And really, it is very proud and privileged for all of us that GSTPAM has started this diploma course with the MNLU, and it is first even in India also. Various activities is going to be taken place. Just to inform you that on 29th October, we are holding the Arvind Thakkar Memorial Lecture in our library physically which we have the topic of the stress management, and we are going to call expert. And this program will be also virtually also going to be held. So that will be a great advantage for all of us. And many more programs is going to be take place. I know that this special meeting is in October. So before in November, we have a Diwali is going to come. So I wish all of you the happy Diwali and prosperous New Year. And I already told you that that this year is going to be a remarkable year for the GSTPAM in front of the education, in front of entertainment, and in front of the fellowship. So I keep my promise, and I especially thanks to our office bearer, managing committee member, our IT committee head, Shijal Shah, Parth, and everybody that we are doing good work, and let us tempo go ahead further. And for the today's speaker, Shri Rajiv Luthia, I welcome him. And for the recent amendment, as Parth has already told, that for the recent amendment in GST, I think is the best suited person. So Rajiv Bhai, thank you very much for accepting our invitation, and we feel that your knowledge of the GST will enrich all of us. So thank you once again, all of you. And still, if you are not a member of the GSTPAM, do not miss the opportunity. Many more to come. So let us come here, be a member of GSTPAM, and have a wonderful future and all. Thank you so much again to you, Sejal sir, for your listening. Thank you, Sejal. Thank you, Parth. Go ahead.
Yes. Thank you so much, President sir.
Sejal, sorry to interrupt you.
Yes.
Since Mr. Rajiv Luthia is visible now, can we take a screenshot again?
I have taken it. Sunilji, we have taken. I have taken.
Oh, okay.
Yeah, as soon as he was visible, we have done that.
Good.
Yeah, thank you. Yes, I take the pleasure to introduce today's eminent speaker, CA Rajiv Jaichand Luthia ji. He has qualified as a chartered accountant in the year 1987. He is also qualified as DISA and passed his LLB in the year 2015. He is practicing under the firm name and style of R.J. Luthia and Associates, Chartered Accountants, since 1987. He is also practicing he was under service tax and now GST as a specialized field. He has delivered talks at seminars, conferences organized by various forums like WRC of ICAI, BCAS, CTC, AIFTP, and even STP Association on the topics of service tax. Rajiv sir has been a contributor to column of Law Update in monthly newsletter published by WRC of ICAI. He has also been a contributor to column of Service Tax Law Update in monthly journal published by CTC. He is a co-compiler to WRC reference manual for service tax. He has also authored various publications for ICAI Delhi, BCAS on the topic of service tax, including background material for certificate course of indirect taxes. He was co-opted member of Indirect Tax Committee of Central Council of ICI for the years 2010, 12, and 2017. He was a special invitee and convener for IDT Committee, GST Group of ICI for the years 2016 and 17. He is also a co-compiler of background material of modest GST law and representations made to central government by ICI on GST. Presently a member of Indirect Tax Committee of BCAS and CTC. He was the chairman of Indirect Tax Committee of the Chamber of Tax Consultants for the years 2009, 10, and 15. So it's a pleasure to have you here, sir. Welcome, sir. Thank you. The floor is all yours.
Thank you, Sejal Madam. Am I audible, Madam?
Yes, yes, sir. Very much.
Yeah. Thank you, Sejal Madam, for your kind words. Yeah, respected President and my dear friend Sunil Kushlani, sir, other office bearers, dignitaries, and the Chairman of Study Circle Meeting, Ashish Shah in absentia, seniors and friends. At the outset, my sincere thanks to the GSTPAM for having given me an opportunity to share my view by leading this fourth study circle meeting. The topic very aptly selected and timely selected. I must congratulate this team under the leadership of Alok Mehta, sir, doing wonderful job. And I've seen the organization there has become suddenly very active, not active, proactive. And what Alok has stated in the history of GSTPAM is the first time that RRC enrollment has been closed. That itself shows the popularity of and the activity proactiveness of this entire committee. So congratulations to entire team. Keep doing this wonderful job in the interest of the profession. Well, friends, GST now more than 4-year-old, but still we have enormous changes. The pace at things are being changed. The notifications are coming up. And at the 4 years, approximately, if you count the number of months, it is around 53 months in which we are running into GST. And we already have 45 council meeting. What I am taking up today is the most of the recommendation of 45th council meeting. So virtually we have every month, there is on an average one meeting happening in spite of the corona effect of almost more than 1.5 years. So government too is also equally proactive, and GST do need that because the complexity, the law being new, that requires a lot of clarifications. So friends, in the today's presentation, what I have been asked you to take you through the amendments, notifications, circulars, which are based on the recommendations by the GST Council in about next 1.5 hours or so. With this, let us go on the subjects. So there are a couple of friends, it is perhaps not possible to cover everything. So what I have covered is important notifications, important circulars, and 1 or 2 important judicial pronouncement and one very important advance ruling also, which is very, very relevant. Most of them are based on the discussions happens in the 45th council meeting and the recent one notifications which amended the law. So this is what the coverage which I will take you through this thing, and these presentations I'll be forwarding to the organizers, which for the purpose of circulation to the participant as the case may be required. With this, let us start with the first. I'll take you through the notifications. The notification number 35 of the central tax, and that was dated 24th September. This is more about the periodicity of form number GST ITC-04. Friends, the ITC-04 is a form which is required to be filed by a manufacturer who is sending the goods for the job work to the job worker for the purpose of job work. So there is a to and fro movement of the goods from this manufacturer to the job worker, and details of the challans for every inward and outward was required to be submitted, which the law requires them to submit it on a quarterly basis as per Rule 45 of the CGST. This is big tedious job and a tiring job also to that extent. So the government has relaxed the periodicity of filing of the GST ITC-04. Instead of the quarter, they have divided the taxpayers into categories. The first is concerned if you are exceeding your turnover, the value of aggregate turnover during the immediately preceding previous year. So right now we are in financial year 21-22. This notification will take effect from 1st October 21. You need to see what was your turnover for earlier year, which was 2021 financial year. If it exceeds 5 crore rupees, then this particular form GST ITC-04 you need to submit on a half yearly basis. So it will start from 1st of October instead of quarter. Now it will become half year. So from 1st October 21 to 31st of March 22, your first GST ITC-04 form will be filed by the manufacturer having transactions with the job worker. So this is one. But if your turnover is less than 5 crore, that means in any other cases, this exercise is required to be done on a yearly basis. So only once in a year. Of course, for this particular current financial year 21-22, the first 6 months, everybody might have filed because the law required that every assessee to file it on a quarterly basis. So even for September quarter, everybody will be filing it. But post October, even if you are below 5 crore, this being first year, only 6 months left out, the remaining 6 months data has to be uploaded in the month of April based on the due date, that is GST ITC. So this is based on the compliance part, some relaxation coming up by this notification effective from 1st of October 21. The second amendment in the same notification is about talking about the rule number 89(1)(a), which has been inserted and which is regarding a time limit for claiming of refund, which is arising in view of section 77 of the CGST Act. This is very, very important. Before going into the amendment, let me tell you what is section 77 is all about. What this section is provide is, if any person by virtue of while making payment of taxes determine while filing his return any interstate supply as intrastate or as any intrastate supply as interstate and make the payment of tax, later on it has been identified or it has been found out, the wordings used in section 77, it has been held the other way around. So you paid your taxes treating the transaction as intrastate, and actually later on it is turned out to be interstate transaction. Either it is held by the department or suo moto if you come across that thing, or vice versa. The first is that in that case there is no evasion of taxes, you already paid the taxes. The section 77 provides that you will be eligible for the refund. You are not liable to pay any interest for the delay. That's one. But the second part is very important is, in these transactions, if you are already paid CGST and SGST while filing the return, treating the transaction as intrastate, and later on it turns out to be interstate transaction, the wordings are held. Now, what is the meaning of held that we'll have to come across? Then you will have to pay that tax as IGST. So that will be double taxation. So you will be eligible for the refund of CGST and SGST, which you have paid at the time of filing return. That becomes refundable. The question arises when to claim the refund. Section 54 is the only section through which you can file the refund claim, and various parameters have been laid in, and various permutation combinations have been given for the claim of refund. Now, 2 years term, how to calculate, that has been given in 54. The issue crops up many a time here is, by the time you come across the error suo moto, or it may be held by department during assessment or investigation, etc., the 2 limit might have expired. So for 2 years time limit. That's why this amendment which has come by inserting 89(1)(a). What it provides that in such case you will have to file a refund claim, but the due date, that is 2 years, when to calculate, how to start. So the rule provides that it will be from the date on which you make correct payment of tax. I'll give you example to that extent. Assume that, say, for 2018 April, you have paid your GST in the month of May 2018, assuming on monthly basis. And there you have paid a tax treating the transaction as IGST, that is interstate. Somewhere now we are in the month of October 21. You realized without any assessments done by the department or any investigation, you feel no, it was not a transaction of intrastate, but it's interstate. So for correcting that error, you make the payment in the month of October of the IGST. So this IGST you have paid. Now the whatever payment you have made in May 2018 of CG and SG, that becomes refundable because there is no adjustment of taxes in such case. You file the refund claim. If you go by section 54, the time limit has already expired because it is 2 years from the date of payment in that case. So May 18 to May 20, the time is over. This section 89(1)(a) provides that your 2 years time will start from the correct payment, which you are making it now in the month of October 21. So within 2 years from October 21, that means you will get time up to September 2023. This is what is the amendment, very welcome amendment to that extent 89(1)(a), and this will also be in force from 1st of October 2021. Very interesting part here is that this amendment has come from now. There may be a cases which have already people might have filed the refund in this case. So there is a provision inserted in such case when the said application, as the case may be for such a which have been already filed before the this rule come into the force, then that for the purpose of this thing, 2 years should be counted from the date on which such rule come into the force. So there were delays in quite a few cases in view of section 54. Now that is been taken care of and your application will go in time. So this is very welcome amendment of 89(1)(a) is concerned. The similar amendment is there in the CGST IGST under section 19. So it is vice versa. Rule 89 simultaneously under the IGST provision has also been amended by the said notification. Welcome amendment to that extent. The next amendment is by notification number 6. This is CT rate notification, and this is related to the rate of tax on the IPR related transaction, which is basically a service transactions. This also will come into force from October 1, 2021. This is very important because the rate of GST has gone up in certain transactions. Currently in this rate notification, there is an entry number 17. And what 17(1) subclause 1 Roman 1 entry, it provides for the GST rate of 6% CG. That means effective rate is 12% on the transactions which are off for a temporary or a permanent transfer or permitting use or enjoyment of our IPR, intellectual property right, in respect of a goods. But the word is here other than information technology. So what in nutshell is this entry stands is, if you have a transactions of IPR, which is otherwise than for information technology software, then the rate of GST effective rate was 12%, that is 6% each CGSG. And there was a second entry below that 17 subclause 2, which provides that for other transaction, which is related to the information technology, the rate was 18%, that is 9% each. Now the entry is concerned, the first subclause is omitted with effect from 1st October 21. So now we have only entry number 17(2). And in that 17(2), they have amended the word in respect of information technology. That means now 17(2) takes care of all the transactions related to temporary or permanent transfer or permitting the use of IPR. So now whether it is information technology or anything else, if the transaction is related to IPR, it will be service transaction with a rate of tax flat 18%. There are two slabs, 12 and 18, that differentiation is gone. To that extent, the law has become simple, but I am sure it will become costly to that extent. Some of the industry, particularly I'll tell you, the rights are given by the authors or the music rights, etc. Those rights are concerned, the rate was around 12%. Now it will be 18%. Cost has gone up by 6%. Of course, if you are getting ITC, it doesn't make a difference. The law has become simple, but to that extent, tax rates have gone up to these transactions. The next entry, which is also again on the rate, and that is related to printing job work. These are all will come into force from October 21. A relevant notification number I have given in my slide. Now here there is a rate entry where entry number 27 of this notification, which provides that the GST rate of 6%, that means effective rate is 12%, for the service by, and this entry which I am talking right now is omitted from October. What it entry stands is GST rate of 6% for service by way of a printing of all the goods falling under chapter 48 and 49. These two chapters, generally what kind of goods were included? So it's newspapers, books, including the braille books, journals, periodicals, etc. These kind of goods were there. And if there's a transaction of printing, the rate was 12%. But where the condition in this entry is where only the content is supplied by the publisher and the physical inputs, including paper used for printing, belongs to the printer. So normally the publisher gives the content, and generally the job worker printer will use his all the material, normally the ink or the paper, etc. And he'll come out with the printing of book or the journal, periodical, etc., etc. Those transactions were liable for GST at the rate of 12% effectively up to September. Now that entry is concerned, the entry is omitted fully. And second, there is second entry below that in 27 subclause 2 Roman, where the words have been substituted and whereby the GST rate of 9%, that means effective rate of 18%, is provided for manufacturing services like printing, publishing, reproduction, material recovery service, etc. So it is at par with that IPR related thing. The law has become simple, but the cost has gone up, the rate has gone up here. Thereby, all this printing will now, earlier was liable for 12 as well as 18, they were based on the item wise thing. Now everything will fall into 18% from October 2021. So effective levy has gone up, but classification has become simple to that extent. I think it is at par with that IPR to that extent. The next amendment is based on the exemption notification number 7 of a rate that is 30th of September. Now this exemption is concerned, there are a couple of exemptions were there. The one of the exemption was that services by way of transportation of goods by air from custom stations of clearance in India to place outside India. So basically it is an international outward transportation of goods by air. This was a by and large. So if they are from India, goods have been exported to UK, USA, Gulf, anywhere outside India, and whatever transportation services was provided by these airlines concerned, they were exempted up to 30th of September 2022. Why? Was up to 30th September 2021. Why this notification number 7? The extension is exemption is further extended by 1 more year. So now it is exempted till 30th of September 2022. So 1 more year of extension for this exemption. Similar extension is granted when the transportation of goods are happened by a sea, that is by vessel. Same. So that is also extension granted for 1 more year. So welcome provision to that extent. This every time I have seen that this is third time extension has been granted to in this particular transaction. The intention seems to be that perhaps on one fine day we'll find this exemption will go away. Otherwise, because there is no blanket exemption, the government is every time is giving extending by periodically. So 1 year, 1 year, 1 year. It is based on the business situation or the situation demands as the case may be. So one has to be on toes as far as these transactions are concerned. It will have a direct impact on the exports. It may become costlier right now because of exemption. The international market may our goods are concerned has remained competitive to that extent. There is a 1 more entry number 61, which is newly inserted in this exemption notification. Very interesting this is. Their exemption is granted by way of to the services which are provided by way of granting national permit to the goods carriage to operate throughout the India country and the contiguous state. That means this is normally any transporter who wants to operate his goods, trucks across India for the purpose of transportation of the goods, he needs to take a national permit on making payment of fees as provided under the respective law related to RTO. And on this particular fee, the issue may come up whether it is liable to GST or no, if it is because service provided by the government, whether it will be under reverse charge, etc. Now, government has granted exemption by inserting this entry 61A. If intention of the government was always to exempt this, I personally feel this exemption they could have given retrospectively from 1st of September, 1st of July 2017, which would have been more ideal. Otherwise, I'm sure with this exemption being notified from 1st of October 2021, there is all possibility that department officers will take interpretation that now the exemption has been granted. That means for earlier period, there was no exemption. And you will find that your client may get notices for recovery of tax on these transactions on this thing. So there may be a possibility of a litigation which arises in this transaction. But anyway, from 1st of October, this is a exempted transactions. Well, friend, these were the few amendments related to notification whereby the rates have amended, exemptions were granted, etc. But as discussed by us, so far so good in discussion. Now I'll take you through few circulars which are also very, very important. Couple of circulars which are rolled out or rather issued in the month of September 2021. Few of them have directly coming out from the discussion during the 45th Council meeting, which has held on 17th of September 2021. Now, the very first and foremost is Circular 159, and that was dated 20th September. It is regarding clarification on the intermediary. It is very unfortunate that this term intermediary and its taxability is concerned. People, or rather I'll say the taxman, the departmental officer, this my experience is concerned, they are not able to digest or understand in a proper spirit in which that notification has defined the term or the law has defined the term. The intermediary is not a new concept. It was there in the service tax regime also, but it has entered the door of taxation or rather ventured into service tax basically through place of supply. That means a point of taxation, a place of provision of service those days. Now we have got place of supply under GST. Now by virtue of that, the intermediary was ventured into. Now, what in service tax regime, we have a couple of decisions, advanced rulings also on the intermediary. As regarding GST is concerned, as of now, we don't have any tribunals on GST, but we have one or two cases which has gone to the High Court, one in Mumbai High Court and one in the Gujarat High Court, as regarding the intermediary is concerned. Now, what is the clarification which government has issued, which is very important, very interesting, because there are a lot of disputes currently going on at the show cause adjudication level or even at the first appeal level as regarding GST is concerned. So here the clarification, the key points are what the government says in this case is that the definition, if you pursue the definition or peruse the definition of intermediary under GST, and if you compare it with the service tax law, it is evident that there is broadly no change. So in principle, there is no change in the definition is concerned in the erstwhile service tax law as against the GST law currently we have. And the scope of the intermediary services in GST regime vis-a-vis the older service tax regime has remained same, except what is except? Only addition of supply of securities in the definition of intermediary. Supply of security means talk about the stockbroker. So stockbroker is purchasing and selling the securities on behalf of the client. So as under GST, he will be treated as an intermediary for the purpose of this transaction. Barring this, there is no change. That's what the circular says. So that means indirectly, barring the stock market related transaction stockbroker, the rest all the decisions which are there or rather advanced rulings which are given or pronounced during the service tax regime, by and large, they will hold good even for the GST regime is concerned, going by this definition. So in this circular, the government go on to clarify, saying that the primary requirement for any transactions to fall under the intermediary services, there are few parameters which is coming out from the definition. First of all, the transactions of the intermediary is concerned, there has to be a presence of minimum 3 parties. If there are 3 parties present, then only transaction can take place of intermediary. This is the first requirement. Secondly, there has to be 2 distinct supplies of goods or services. Not necessarily both transactions should be service. There is a possibility that one transaction is service and one transaction of goods also but there has to be presence of two distinct supply. The third is concerned, service provider should have a character as if he is working in a capacity like agent or broker or similar person. So in nutshell, if you have to conclude on the third point is concerned, the service provider who is working whose services are in the nature of intermediary kind of thing should be a bridge between the two pillars. So those three parties are concerned, those two parties will be two pillars, and the bridge is the one which connects these two parties, will be a person who will be acting as an intermediary. If that kind of situation is there, then there is a possibility of the transaction getting covered under intermediary. The fourth is concerned, this transaction of intermediary service does not include a person who supplies a goods or service or both to or the securities on his own account. That means intermediary should not supply either goods or services which he is principally supplying on his own account. This is what is very, very, very important. So that means the transaction, both the transaction, two distinct supply should be two independent supply and two different supply. If that being the case, then only there will be intermediate. This is the fourth point. And the last is subcontracting of a service is not an intermediary services. So if principal awards any contract to the main contractor, and main contractor subcontracted to further 1, 2, 3, 4 contractors, then in that case, this clarification says that this is subcontracting, which will not be treated as intermediary services. This is very, very important circular for the reason that the show causes and adjudication at the adjudication level as well as appeal, the orders are concerned. We found the things are not digested by the department to that extent. This clarification will go a long way perhaps, and we'll have litigation likely to be reduced once departmental officers goes through this clarification. We have come across the cases when there are Indian service provider providing the services to his foreign counter customers, and their services are of the MIS reporting, making of the softwares, designs, etc. Such kind of intangible item it is making. There were presence of only two parties. In spite of them, the department has held that it is an intermediary. Now, why such kind of decision or so? For the simple reason is that the place of supply of intermediary services, whenever you are dealing in a cross-border transaction, that means the two parties involved in this transaction, at least one of which is located outside India, the place of supply will be the location of the service provider. The moment service provider is in India and his customer is located outside India, and if department classifies the transaction will go outside the net of exports. Not only that, it will be liable for a CGST or SGST as the case may be. So that is what is causing a lot to the businessman. Not only is losing the refunds on the other end, if at all is claiming refund, on the other end, there's a demand being raised because of this. So now I'm sure with the circular, there will be a lot of benefit or relaxation to that extent. I hope it has been clear. If you have any issues, you can pose it in the chat box, etc. And I'm sure if time permits at the end, I'll take it up, Cyril or anyone from the GSTPAM office where I can read it out at the end. With this, we'll go to the next of the clarification, and which is coming out by Circular 161. This circular is about a not distinct person. Now, what is not distinct person? Now, this clarification is more connected with the export of services, and there are 6 conditions which are laid down in section 2 subclause 6 of the IGST Act, which defines export of services. Now, one of the condition is concerned in a transaction of export of service, the recipient of service is outside India and the provider is in India. And both these entities should not be merely establishment of a distinct person. Distinct person term is defined in section 25 of the CGST Act and corresponding section 9 of the IGST Act. Now, what it says that like if you have an office or rather your assessee is in India, and if he has got a branch office, say in UK, then both these parties, if there is any transaction between these two of goods or services, or service as the case may be, then that will not be treated as export of service, because both of them are merely establishment of a distinct person. That means a branch of a same entity. Now, this branch of the same entity was causing a lot of difficulty because of the interpretation which was being given by the departmental executives while granting the refund or any other adjudication process. Now, what has been clarified is that when a company, any company which is incorporated in India, say AN company is incorporated in Mumbai, and as a body corporate, and then there is another company, say BN company, which is also body corporate, but it is located in USA under the different law or the local law of that country, and which we referred for our India, we call it as a foreign company under those act. Now, both will be treated as a separate person in spite of the fact that it is a holding company of our Indian subsidiary, as the case may be. So holding company and subsidiary company will not be a distinct person, but it will be a separate entity, and a transaction between these two will not be hit by this clause clause 5 of section 2 subclause 6, and the transaction will become export of service if at all is applicable. This is also very important. As such, there was no dilemma according to me, because such conditions were there in the old law, but it is better that it has been clarified by the CBIC or the government, which will, many of those issues which are there in litigation, will have a good supporting available to that extent to come out of these issues of the distinct person in case of transaction cross-border transactions. Next is a circular number 162, and that is dated 25th of September 2021. This is giving a clarification related to section 77. We have just discussed a couple of slides back about the section 77 is concerned. Now, this section 77, once again at the cost of repetition, what it provides for CGST is that if your transactions which is there of interstate, and you treat it as interstate and make payment of tax, okay, later on you rectify it by making payment of correct tax. The first is there is no requirement to pay any interest because there is no loss of revenue, and now you can claim the refund. The time limit of 2 years, how to calculate, that is being notified. Now, in this transaction, in this section 77, the words as used in the section is which is held as. That means a transaction which you paid the tax as IGST by treating this as an interstate transaction, which is held as intrastate transaction. Now, what is meant by held? Subsequently held. Specifically, these words. How to interpret? Normally, held means what? It is the government officer at the time of assessment or adjudication will decide. That is called held, because you are filing a returns and declaring your transaction, followed by you file your annual return if it is applicable. Thereafter, it is a self-assessment. So in the self-assessment, unless and until the officer has any issues or queries, your returns will be treated as accepted, and that is a time limit for issuing of the show cause. Now assume show cause or the assessment proceeding starts after 3 or 4 years, and the order is passed thereafter. And there the department passes the order, which we normally call a held as. Now, for the purpose of this held is causing problem, that says this circular clarifies that held means even the assessee himself later on come to a conclusion about the transaction of interstate or intrastate or vice versa, that will also be covered for the purpose of subsequently held. So it is not necessary that it has to be held by the departmental officer. Even suo moto, you take a view over a period of time, then also it will be treated as a held, and thereby you can go and file the return. This is very important. This clarification will go a long way in resolving many issues. The next slide is about next clarification. This is continuation to old. So I already discussed, cover both it. Now the clarification says that held is subsequently held covers both the situation. It is held by taxpayer himself, which is suo motu, and it is held by the tax officer in any other proceeding. So this will be according to the refund claim under this section can be claimed by the taxpayer in both the above mentioned situation. The time limit of 2 years, which we have discussed. Okay. Now the next clarification, and that is related to the classification and the rate of tax on certain goods. This is about circular number 163, and which is very recent circular of 6th of October 2021. And that is determining the rate of GST on certain transaction. Here, I have taken up external batteries sold along with UPS or inverter, uninterrupted power supply, UPS. All of us are using on this electricity issue. So UPS is normally for maintaining the power supply. It can be also used along with the computer to give a power backup. Inverter will also go on the same line. The question comes is that what is the GST rate on the external batteries? Because this UPS and inverter can't work without the batteries. It is in absence of power, they require supply of power which they get from the batteries. And whenever you buy UPS, generally you will find UPS system and there will be batteries coming up. There are many vendors, they may be writing you UPS XYZ price and batteries 1 or 2, whatever, depend upon the capacity for Y price, and that will come as a system as a whole in one invoice to you, or maybe a 2 separate invoice. Now, clarification has been sought by the industry on this issue, that what is the rate of tax? Standalone when you buy, because life of UPS or inverter may be 3, 5, 10 years as the case may be, but life of the battery is not that long. So even if you have UPS, your battery needs to be changed, maybe periodically based on usage, 1, 2, or 3 years or so. So there are many transactions where you have only battery transaction happens. And battery is concerned is classified under heading 8507 at 28%, whereas the UPS and inverter is concerned, which is sold at 8504, 18%. So both these goods are having different rate. So now which rate is applicable when you are selling these goods as a system, UPS system? When I talk about the system, just I will give an example. When you buy a car also do have a battery, but nobody write in the invoice car along with battery. Okay, battery is required for starting. Without battery, your car will not work. Okay, required for starting. Otherwise, fuel will change. Case maybe, but battery is nothing but integral part of the car. It loses its individual identity. Of course, you can replace the battery in a car periodically based on the life is concerned. So when you are buying the car, that time it is battery already included. That time you are not buying battery, but you are buying a car. But later on, when you replace the battery in the same car, that time your transaction changes the character to a battery. Unfortunately, industry has sought the clarification, and what has been clarified by the government is concerned, even if UPS inverter and the external batteries are sold on the same invoice, that means simultaneously sold on same day, same invoice, their prices are separately known. This itself is I'm not very sure, because when you buy inverter system, it is not necessary that you should give to independent price. You can write down inverter straight away 40,000 rupees, all inclusive. Like you buy a car, they will write down car sell 10 lakhs rupees, all inclusive. They will not say this much is for battery, this much is for your seats, etc., etc. Nothing of that kind. But here the government says that the prices are known and there are 2 separate identifiable items. I don't agree to this. Further, it says that this constitutes supply of 2 distinct identifiable items on one invoice. This is a clarification. With a due respect, I don't agree with this also. Therefore, in such supply, UPS inverter would attract a GST rate of 18% under 8504 code, HSN code, and the external batteries GST at 8507, which is 28% for all the batteries at a very high price, except lithium ion battery, because there the rate is 18% only. Now, actually speaking, is this a clarification clarifying the situation, or confusing or creating more doubts or other more issues? In my view, it is making the life miserable to that extent. If I am in a business of UPS and the batteries, There are 2-3 different type of transaction I will enter. One, I will sell only battery. When I sell only battery, there is no doubt I have to charge 28% on the battery, except the battery is a lithium ion battery. Suppose somebody is asked for only UPS and he don't want battery, then also there is no difficulty. It is a UPS system and 8504 will be there and with 18%. And third type of transaction is there. Somebody wants UPS with battery. You never go and ask the car dealer to sell his car with battery. I don't think that is how the transaction is be done. You ask a UPS, that means it is battery is involved within that. Okay, it is part of, while raising the invoice, you have to say that because without battery, UPS can't work, can't function. So it will be integral part of UPS and it loses its own identity to that extent. Like when you buy a shirt for yourself, the buttons are already included. You can't say I have purchased shirt with buttons. It is assumed button has to be there. It is part. Without that, the shirt doesn't get complete. Okay. Same way battery is a. So here, whether UPS can function without batteries? No. Something which cannot function, that means battery is integral part. And I think that 18% should have been continued. But having asked this clarification and which is being clarified by circular, of course, they are not binding on the assessee. But if you are going, taking contrary view, litigation is sure, and that will also go up to the higher forum, maybe tribunal or high court or even up to the Supreme Court. This is what EG 163 circular is concerned. Now the next is about circular number 164 circular, that is about rate on service tax on cloud kitchen and central kitchen. In this COVID regime, there are a lot of new things we have seen or visualized or experienced, new models of business, etc. And of course, the businesses are concerned proactively. They have no choice but to come out looking at competitions, cutthroat competition, supply demand to survive. It is, it's if you want to survive or progress, rather, you need to have edge in your business as compared to other, and you have to proactive in your field. So here also same in restaurant service, we have seen a cloud kitchen concept or central kitchen concept. Those things were not there at least 10 years back in India, which we are seeing. Now the question was coming up, there are 2-3 things. What will happen? Because they are predominantly cloud kitchen and central kitchen are not restaurant. There is only one concept. You have to place the order. There are various boards available through Swiggy, etc. or the portal. You can place the order and food will be delivered at your place, wherever you have placed the order for. You cannot have access physically to this kitchen. There is no facility, sitting, nothing is available to that extent. Okay. So what about the taxability, whether it will be restaurant service or not? That is one. Secondly, nowadays there are various service providers who are into the business of delivering of the good, like Zomato, etc. Swiggy, Zomato. Now they are also delivering the food from whichever restaurant you place for it. But they don't have a restaurant per se. They are not cooking. They are picking up from a place you ordered and they deliver at your place. Now here is this clarification is more of a kitchen, not for Swiggy. Now for that, the restaurant service term is defined in the rate notification of 11 of 2017. This definition is very interesting. Let us observe this, read this definition. It says the restaurant service means supply by way of or as a part of any service of goods being food or any other article of human consumption or any drinks provided by a restaurant. It has to be provided by a restaurant, eating joint, including mess, canteen, whether for consumption or away from the premises where such food or any other article for human consumption or drink is supplied. So this is what the restaurant service means. So the service is concerned, it has to be definitely supply of food in the course of providing services, and that is so meant for human consumption, and it has to be provided by restaurant, eating joint including. So this service predominantly has to come from mess, eating joint or restaurant or canteen. Now there is an explanatory note under this notification, and where for the purpose of this restaurant service for classification, it says that explanatory note states that restaurant service includes service provided by restaurants, cafe, or similar eating facilities. That last line is important, including takeaway service, room service, door delivery of food. This is what is very important in this explanatory note. So restaurant service also include takeaway or room service or door delivery, which we are more important. And this cloud kitchen and central kitchen is only in the door delivery. Okay. Now here the circular clarifies that the takeaway service or door delivery services for consumption of food are considered as a restaurant service. Basically, as a layman or a man of a common sense, common parlance, restaurants is normally the place where the food is being cooked and served to a customer who can sit and enjoy his food over there. That is what the restaurant is basically. And then only you need to have a restaurant license from the local body. But cloud kitchens are concerned, there is no sitting facility. In fact, you may not be knowing the physical location also, because it is only through portal or such agency the order is being booked. Okay, so it is a cloud kitchen or central kitchen. They don't require any license of a restaurant. They will require license of food and drug adulteration, etc. So here it says that, and accordingly, service by an entity by way of a cooking and supply of the foods, even if it is exclusively by way of a takeaway or door delivery or through or from any restaurant, would be covered by restaurant service. So this has been clarified by them that such cloud kitchen and central kitchen will also form part of restaurant service. They are covered within that. That being the case, this would thus cover service provided by cloud kitchen, and therefore the rate of tax will be 5% without ITC. Now, actually speaking, it is slightly not digestible, but anyway, the definition says that you need not be restaurant for providing the food service. Even cloud kitchen is for, so by deeming fiction, you are falling within that is fine. But this circular, whether you can digest or not, it comes out to be a win-win situation for this industry, because if this circular is not there, there is a possibility that the departmental officer can try to tax that at the rate of 18%. Because once you are out of 5%, you will go into the section, which will be 18%. The extent is solace to the industry, and it will be now liable for the, I'm sure the industry will welcome it. And this will, this is being a clarification, it will have effect from day one, and 5% without GST. You need to pay the tax by this cloud kitchen and central kitchen. I just draw attention vis-a-vis this circular, because in GST law we have circular and it will be applicable in GST regime. But just prior to GST regime, we have a lot of issues were going on as regarding the restaurant services are concerned under service tax regime. And just this is to draw your attention, there is an Honorable Madras High Court decision in the case of Anjapar Chettinad restaurant, and which is reported, I have given, it is reported recently in 2021, where the issue was discussed about that whether the pickup and the home delivery of the food is liable for service tax in the service tax regime. And Honorable High Court has stated that sale of food and drink simpliciter, service of selection and purchase of ingredients, preparation of ingredients for cooking and actual preparation of the food and drink would not attract the levy of service tax. So when you are, what is sought to be taxed in the erstwhile law is concerned, is a restaurant service, which will have a facility of your taking, you eat the food, but beside that, there is a facility being given, that of sitting, decoration, decorum, music, dance, live or otherwise. There will be waitresses, hostesses, etc., etc., crockery, cutlery, and others. All those things are the one which they provide you during the course of provision of services. And that's why there was an element of service, and it was liable for service tax to that extent. It was obviously also liable for VAT. So this transaction was liable for VAT and service tax both. Now in GST regime, they think we don't have separate VAT, we have everything subsumed. So once it has been subsumed, but unfortunately in the cloud kitchen, in the erstwhile region, I'm sure would not have gone to the restaurant services to that extent. But this is just for this. So, Honorable, a very important decision which will be useful for you if you want. If you are interested, you can read that how the restaurant, what attribute should be there for any services to be classified as restaurant service. But this decision will not hold good in the GST regime. The observation of the courts are concerned, very important. It says that by and large nowadays the for home delivery etc. The orders are being received by the restaurant on telephone or email or any other booking portal or through various delivery service providers like Zomato, Swiggy, etc. Once you go by this, the orders are being received. There is a separate counter for pickup, either or delivery service provider. And such takeaways are concerned. Here is a transactions of sale of goods, and thus it was held that the service tax will not be attracted. Of course, in GST it will be treated as services by virtue of the Section 7, Schedule 2, and the clarification coming up. The next clarification is circular number 164, and that is also same 6th of October. This is clarifying on the rate of GST on the ice cream supplied by the ice cream parlors. This is also an issue whether such ice cream parlor is a restaurant or what, and whether it will be liable for 5% service, because if ice cream is liable for 18%, the restaurant is liable for 5%. Of course, 18% there will be GST credit is available. In 5% you don't have ITC. But if you want to pay 5%, whether you will be eligible on that, this issue clarification was sought from the CBIC, and that is what clarified in circular 164. Now, while clarifying, what government has stated is, generally the ice cream parlor, generally, they sell the ice cream which is already manufactured. So you will have various ice creams, like quality ice creams will be there, or very dairy day, so many ice creams, or there could be a natural ice cream. That is natural ice cream also. There are various franchise shops. They have their own factory. From there it is coming to the display shop or a shop, whatever you call it as a parlor. And it is displayed, and you can select one out of whatever available. So what circular says that they do not have a character of a restaurant. These are only ice cream parlors, a store where the ice creams are sold which are already manufactured. In a hotel, normally it's a tailor-made restaurant. You place order for a dosa or some other product, as the case may be, any vegetable. Based on the order, they will cook it. A possibility is there that some of the content ingredients may be cooked and kept ready, but final product cooking happens only after you place the order. Okay, so this is a major difference they have stated in this circular. Thus, the supply of ice cream parlors stands on a different footing other than as compared to restaurant is concerned. Their activity entails only supply of ice cream which is already manufactured, which is a goods, and there is no element of service. Of course, in many of the ice cream parlors, you can sit and eat. There may be one or two tables, chairs, as the case may be, and you take a scoop or cone, as the case may be, and you can sit and eat. But and there may be waiter also. But by and large, that is a facility being provided, but there is not as a part of the service. Okay, like that, I've seen many sweet stores are also there. They are selling sweets, Bengali items, as the case may be, and there may be a sitting available. You can eat something over there, but that doesn't mean it will have character of a restaurant, because nothing has been cooked. It is already ready, and you just you identify, and they will serve you. So council has recommended that this is not restaurant. It is a sale of goods, and it will be liable for a rate that is applicable for transaction of goods, which is 18%, and that is recommended by council, and government has clarified. So ice cream parlor, the rate of tax is 18%, and it will be eligible for ITC also correspondingly. This is being clarified, so it will have from day one, this will be the position. The next clarification is circular number 164, and that is just on the overloading charges at the toll plaza. The goods transport by road in a trucks, the capacity of truck is suppose 8 ton. We find many a time it carries 10 ton of material. So there is overloading by 10 or 20%, or as the case may be. Now that is legally allowed, provided you make the payment of a differential fees based on the extra load. That is what has been clarified by the Ministry of Road Transport by notification of 2018. So this overloading is concerned, you can take overload up to certain limit as per the law, and by making payment of an overloading fee, which they call, such overloading fees are more in the nature of a toll charges only. Now question comes is whether that overloading fee is liable for service GST. It has been clarified. It will have it will be at par with the toll, and toll is paid for what? For access to a road or a bridge. On payment you can have, so which is called toll, and today it is completely exempted by notification number 12 of 2017, entry number 23. So thereby, this overloading fee also will be at par, and there will not be any tax on this. This is clarified, welcome provision to that extent. The next is about renting of vehicle to the state transport undertaking and the local authorities. Okay, here very important point is the words you see is renting. Now representations has been gone from this sector to the government, that whether they will be, if they are renting their vehicles to the state transport unit or local authorities, whether this transaction of service will be eligible for exemption under this notification number 12 of 2017 or dated June 2017. Now for that, let us go to the entry, relevant entry number 22 of said notification, which says that service by way of giving on hire, the words used are giving on hire, and they have asked for renting. So there's a different in this thing, giving on hire and renting. So in some substance, the trade was seeking a clarification whether giving on hire includes the renting or no, because the moment it includes, then there is already an exemption, entry number 22. And why this clarification has been sought? There is a history on that. Then there are one or two advance ruling. One I have referred here for your reference is from Maharashtra, and that is in the case of MP Enterprises and Associates Limited. In this case, the advance ruling was sought in Maharashtra, and advance ruling authority has held that renting of vehicle is not akin to hiring, and exemption is granted to hiring of vehicle. That's why renting of vehicle is not eligible for that said exemption, entry number 22, and it will be liable for tax. This was the advance ruling authority. Now, there's by virtue of that, the issue has cropped up, and that's why clarification has been sought. And now with this circular, it has been clarified that giving on hire includes renting of vehicle. That means giving on hire is a very broad term, and renting of vehicle is a sub-species of that, and also will be eligible for the exemption. So this advance ruling of Maharashtra is concerned will be now null and void by virtue of this circular 164, which is very important. And this being a circular will be applicable across the country in the trade, and a big solace or relaxation to that extent for this trade. It will help in a long way to them. The next circular is 164 again. In this circular, there are a lot of clarification. One more clarification is service supplied by a contract manufacturer to the brand owners for manufacture of alcoholic liquor for human consumption. The word is written alcoholic liquor for human consumption. Why this clarification? The industry has asked for the clarification that there is an entry in notification number 11, and that is entry number 26(1)(f), which provides the rate of tax at the rate of 5% when you are doing job work for a manufacturer of goods which are meant for human consumption. They argued that liquor is a good meant for human consumption. Okay, and the words is being used that job work should be in relation to food and food products. So issue is whether liquor is a food and food products or no. That is what the clarification being sought. So GST Council, based on in that meeting, has discussed this, and based on their the recommendation of Council, government clarified that the expression food and food product in the said entry excludes alcoholic beverages. So alcoholic beverages are not food and food product for human consumption. As such, even in common parlance also, alcoholic liquor is not considered as a food product. And therefore, the 5% rate of job work which is meant for the food product, job work in relation to food product, shall not be applicable when you are doing job work in connection with the alcohol is concerned for the manufacturer. And it will not fall under that entry 26(1)(f), but it will cover under 26(1)(ca), which was newly inserted, and it will take a rate of 18%. Now, this entry is inserted from 30th of September 2021. So, in my view, in for earlier period also, the rate should be applicable at 18%. Although we don't have a separate entry, we have to go by a residuary entry. Now, we have a separate entry available from 30th September is concerned. This being a clarification, it is not a notification, it is circular clarifying. Well, friends, with this, I have completed few important amendments under the circular are concerned. 1 or 2 judicial pronouncement, if interested, you are, Sejal madam, how much time do you have? Do you will permit me? If I have some time, I'll take 1 or 2 decisions which are relevant, very important, if at all you feel. Else, I have done with my notifications, circulars, etc.
Sir, you can take it up.
Yeah, thank you. I'll take 5 to 7 minutes, sir.
Yes, sir.
Yeah, thank you very much for your kind consent. Now, this, of course, in the topic, my important judicial decision was not there. I thought in the interest of the participant, let me take 1 or 2, which is very relevant. The one is of construction very recently. In the month of October, we have this decision. Jyoti construction case, Deputy Commissioner, it is of a Jajpur, Orissa High Court decision. Very interesting, very important, far-reaching effect. The first is that you know that in GST, whenever you are aggrieved by the order in original passed by the authority and you file your first appeal, you need to pay a pre-deposit amount that is sum equal to 10% up to maximum of 25 crore rupees. That is what the section 107 subclause 6 provides. So whenever you have an order in original, you have to first find out, are you aggrieved by entire order or amount involved therein? If you accept some of the amount, you need to pay that amount fully, which you are admitted. If you are aggrieved by full and you are going against appeal, you need to pay 10% of the tax amount involved therein, subject to upper limit of 25 crore. Now, this is what the section 107 pre-requisition for filing the appeal. Now, here the question is concerned, this whether the can be paid through the amount of credit lying on input tax credit ECL, electronic credit ledger, or it has to go by the electronic cash ledger only. This was the issue for this matter has been traveled to the High Court. Now, in that, during the process, there are argument. I have picked up 1 or 2 important paras from there, considering the constraint of time. The first, let us look at the definition, section 49 subclause 3 of CGST, which provides that any amount available as a balance in cash ledger can be used for tax payment, interest payment, fees payment, late fee, or any other amount provided in the Act. Okay, so 49.3, there is no bar as far as cash ledger is concerned. When 49.4 comes, it talks about electronic credit ledger, which is normally that ITC ledger. And now there is a 49.4 says that it can be used only for making payment towards output tax. You see the wordings in the 49.3, the word is used tax. Tax include RCM tax also, but output tax I'm sure may not be included. Plus, there is no interest penalty fees. So ECL has a very limited usage possible. Law doesn't permit you to use as per your this thing, winds and mills. So 49.3 is much broader under the Act. So this is between 49 and 49.4 is. Now look at section 41 subclause, which provides that a registered person shall, subject to conditions and restrictions as the case may be, entitled to take credit of eligible input tax as self-assessed. Okay, you can take a credit of your input tax which you have self-assessed, okay, in his return, which you are filing 3B return on a monthly or quarterly basis as the case may be. And such amount shall be credited on a provisional basis to your credit ledger, whatever you avail, because that is to be done on self-assessment. And in that 41 subclause 2, which is crux of the entire matter, falls under 41.2, which provides that the credit referred to in subsection 1, which you have done self-assess, shall be utilized only for payment of self-assessed output tax. This is what is very important. It can be used only for self-assessed output tax as per return. So what is self-assessed? Self-assessed means you yourself assess and file in your monthly or quarterly 3B. And for that discharging that liability, only you can use your ITC. And because the term is defined, self-assessment, and which is section 59, and that assessee himself find out his liability and file his return under 39. This is what is self-assessed. Okay. And what is output tax? A tax chargeable under this act on taxable sum of goods both by taxable person agent, but exclude tax paid on RCM. This is what I am taking. RCM tax is tax liability, but it is not output tax. Fine. So the entire question here is that when you are filing an appeal, there is no self-assessment. You already filed your return, or either you're not filed or filed, but it is adjudication has been done or assessment has been done by the officer. And he has determined the liability which you are aggrieved of. And that's why you are filing an appeal. So pre-deposit comes only when the tax has been determined by the department which you are not happy with or convinced with. So that cannot be covered under self-assessment. Had it not been covered, you are straight away outside the of section 41(2). And the moment you are outside 41(2), you cannot use your input tax credit ledger balance to make payment of pre-deposit. This is very harsh. It will go very costly for the assessee, because one end there is a possibility he will have ITC balance enough lying in his credit ledger. On the other end, for filing appeal, he will have to pay minimum 10%. So there will be cash crunch to that extent, liquidity issue will come. This was not the position in the erstwhile service tax regime. And the court in this state said that it is not possible to accept the plea of the petitioner that output tax could be equated to the pre-deposit. Court says that pre-deposit and output tax are completely different. Output tax is tax on your supply on output side, as against pre-deposit is the amount paid as a compulsory deposit for filing the appeal, which comes back to you provided the decision goes in your favor. And 41(2) court says that is very clear, restricting the usage. And secondly, section 107 is not a machinery provision, but it is a substantive provision, lays down the conditions for filing the appeal. This decision is going to be, there are many appeals which are being filed as of now utilizing electronic credit ledger balance for paying pre-deposit. I'm sure most of us will get very shortly the notices from the department saying that please make payment of this by cash ledger, otherwise we'll dismiss your appeal. So you have to be mentally being prepared. Now this is very important, the same government in the not government, I'm sorry, in the erstwhile law, in the service tax regime, the Dell International Service Tax case, which is there of a Bangalore state, and where it has been clarified, this is not service tax. I'm sorry, it is a case where the matter was under the GST only, but the demand was on account of the old regime, service tax, and those appeals have been filed now. So when the appeals have been filed, the pre-deposit was made from the crediting the account, and this appeal was filed in the GST regime by using the money from the credit ledger. The Honorable Tribunal of Bangalore has accepted, they say that having paid the amount as pre-deposit from credit ledger is a due compliance to the statute relied upon the circular number 42 of 2018. This circular is issued in GST regime, and where government themselves stated that pre-deposit you can pay from credit ledger. Now the court has completely, that means this circular is now null and void to that extent, and you will have a tough time. So in spite you have a decision, Delhi International in your favor of tribunal, you have a contrary decision from Orissa High Court coming up for in your case. Now we have other decision for reference in the case of Gujarat High Court. In the case of Kedila Health, of course, these were as regarding the old law of excise. Everywhere those days, the pre-deposit is concerned was permitted out of your settlement credit balance. But the law has changed. The section 107, the way it has been worded, and section 41(2), the way it has been worded, I think the Honorable Orissa High Court has rightly held, which is, of course, unless the law is amended, it will cause a lot of hardship to the assessee to that extent. Well, friends, these were the few of the important. There are many other decisions. I will not go into because I think I have overshot the time. Just completing in a minute or two. This is very important decision of Union of India versus the VKC footstep, and this was related to inverted duty structure is concerned. It is a contradiction between section 54(3) and corresponding rule 89(5). So in such case, whether the person claiming refund under inverted duty structure is entitled for the refund of the amount which he has paid on input service. We have a favorable decision in past from Gujarat High Court. We have a contrary decision from Madras High Court, but now matter has traveled to Supreme Court. Supreme Court quashed the decision of Gujarat High Court, upheld the decision of a Madras High Court in the case of Trans-Tonal Story, and this in service is concerned will not be eligible for the refund. The last is one interesting advance ruling of Bengal, West Bengal, in the case of a Kanhaiya Realty Private Limited. Many of our clients may be dealing in such kind of thing. It is a promotional transaction activities carried out by the client. When you buy a bulk buying of product from the client, normally distributor dealers are concerned, they buy from the manufacturer. They also offer some items at a very discounted price. Suppose in this case, there was a hosiery dealer. And hosiery dealer tells you, if you buy 1,000 piece of this, the refrigerator worth rupees 30,000, I'll give you for 1,000. Such kind of transactions are there. So what is the rate of tax applicable on this transaction? Both are mixed supply or the separate supply. Fortunately, this is important and interesting. Advanced ruling authority has contradicted the erstwhile decision given by the various other advanced ruling authority by holding that these are both are completely different transaction. It is not a mixed supply. You have to first become eligible for the purpose of second transaction by purchasing the goods in a wholesale quantity, and thereafter the second transaction happen. That's why it is independent supply and tax will be leviable as a respected good. Well, friends, my apology for extending by 5 minutes or so, but once again, my sincere thanks to the organization for having given me opportunity. If time permits, I am here to give, if at all any issues, I leave it to the organizer. Thank you very much, Parth, and all the team members. Thank you.
Thank you, sir. Sir, you don't need to say sorry. You have gone above and beyond what was allotted to you. So we are thankful for that. But there are some questions, sir, which I will ask the convener of LNR committee, Rahul, to take it up. Rahul.
Thank you, Parth. Thank you, Raju, sir, for your wonderful insight on the new amendments which have come up in GST. Some are really draconian and some are beneficial to the assessors, definitely. Now, the questions which have been posted, first question is, whether services provided stock brokers to FIIs still be liable for GST post this clarification by way of circular 159?
Yeah, this if you look at that circular, it says that there is no difference of the intermediary scope and coverage as it was prevailing prior to GST regime in service tax and now which has been what has been defined in GST, except that security transaction is security. So what they are trying to say that the transaction as securities are concerned, if you are into that, that will certainly fall under the intermediary, and there is absolutely no doubt about it because there has to be a two supply happening. Only thing the security supply is concerned. The security is the second supply is outside the purview. Security is neither goods nor service, and that is where the problem is. Suppose Mr. Alok is concerned, he is a stock broker in this transaction, and I am a customer in that case, and Alok purchases some goods shares from the exchange. Okay, in that case, the first transaction is of a brokerage which Mr. Alok will charge me. So that is whether it is intermediary. So the second supply is missing because second supply is about the securities, and securities are neither goods and nor services. So that's why when there is no second supply, intermediary concept may not come. So I think Rahul, in this case is concerned, I have no doubt about the taxability of the broker is concerned, but it may not be fall under intermediary because there is three parties are present, but there is an absence of two supplies because securities are neither goods nor services.
Thank you, sir. Moving on to the next question. Circular number 164 regarding ice cream sales taxable at 18%. Applicable from which date? How to claim ITC for old period 1718 or till 1920?
Yeah.
Sir, can you throw some light on this?
Yeah. See, this first of all, this is a circular. It is not a notification. So circular is not a law by itself, but it is a clarifying the law. That is the first thing. So once you have this clarification from the government by way of a circular, it will have as if it will be applicable from day one. So there is nothing called retrospective. I'll say that it is always, government says that, clarifying that ice cream parlor is not a restaurant, and what parlor does is not providing services, but it is selling the goods only. And that was the intention, and that was the transaction from day one. So in a way, for your simple understanding, it will be retrospective for our layman's understanding from day one. Now you need to pay. The first question comes is, if you have paid 5%, etc., you have a sword hanging on you because there is no 5% rate for this. It will go for 18%. That's one part of it. Now, second question you asked me, you have so you have to be ready for this differential 13%, provided I assume that you paid 5% as a restaurant. Secondly, if you have missed the bus of claiming the ITC, I think this clarification is concerned. This will not make you, help you or support you to take the credit of that ITC, because you have to always stick to the deadlines which is provided in the statute for claiming the ITC. That is within 6 months from the end of the year. That's the maximum period you have. Now, even for the financial year 2021, we have this September return is the last return, which I think tomorrow or so, whatever date, that is the last day. Beyond that, you will not able to claim. So if you have missed the bus for taking the ITC, legally there will not be any recourse available for you to take the ITC of those credit. And I'm sure one more thing, your argument also will not survive if you have paid 5% tax. And if you try to argue that, okay, 18% tax, even if you want to levy, kindly allow me the ITC. I think that argument, tax neutrality, will not work in this case for the reason that ITC is not a right per se. It is a benefit being given or bestowed upon you to that extent, subject to you fulfill the conditions. And that condition is one of the important, you need to claim it. Having not claimed, it is not like a service tax regime which we have. That particular, all those decisions which we have in service tax regime will not come handy to you. So I have my own doubt. Rather, I feel that you will have to pay the differential tax and you will lose the benefit of ITC. This is what is my view. Of course, it will go for long litigation. My understanding of the law, I have given my views.
Thank you, Rajesh sir. Sujata Rangnekar has one query. Ma'am, you can unmute yourself to ask the question.
Yeah, am I audible?
Yes.
Very much.
Yeah. Sir, you have said that under section 77, they are specifically provided for the time limit of 2 years. Earlier, there was some doubt regarding whether the time limits under section 54 apply to that or not, because it is simply, a double taxation of the same transaction. And the school of thought was there. The revenue is, duty bound to refund that tax to us, irrespective of the time limit for making that application.
Correct.
So by providing such a time limit, exceeded the brief. I mean, constitutionally, will it be viable?
See, first of all, in my view, the time limit is never been provided in section 77. Actually, the entire refund under this GST will fall under section 54 only. And there are various situations being envisaged in the GST. And one of that section provision is by virtue of section 77. If you just check the GST provision, there is a section 54 to that section subclause 8. And in that subclause D is there. What it says that section 54.8, notwithstanding anything contained in subsection 5, the refundable amount shall, instead of being credited to fund, to be paid to the applicant if such amount is related to refund of tax in pursuance of section 77. So section 77 is not a refund provision, but it is creating a situation where there is a possibility of refund. So the 77, yes, the tax, either it is liability was IG and you paid CG as SG or vice versa, then only the 77 come into play. It has never, there is no refund provided in 77 and there is no time limit provided. Time limit was provided in section 54 only. Now that is one part. Now what has happened is that there was an anomaly because this clarification is coming up and the time limit is now being provided by amending the rules to that extent by this notification number 35. In a way, let me tell you one thing, it is a win-win situation for the assessee. I don't think any assessee will challenge it. That is one part of it. And secondly, the section 77, if you read subclause 1, it says that which is subsequently held to be interstate. So it is intrastate transaction subsequently held to be interstate. Now, ma'am, held is what? Because when you have a self-assessment, as an assessee or as a consultant, you will work out and calculate your liability and pay voluntary. That is what is a self-assessment. You never held it. Held is normally is concerned. It is a department who will be doing assessment or adjudication as the case may be. So we read so many orders. So it's court has held that, officer has held that, commissioner has held that, like that we write down. SSE has not held. SSE is concerned, they classify, or you can say they determined in this fashion. Fine. So this held word was being used and how to interpret, that's why it is section 77 as concerned. We have a rule 89, 1A and 35. And the time limit is concerned, you are talking about the constitution. So first of all, unless department challenges to this, which I have 100%, I'm sure this being in the statute notification department, it's binding on the department. But as regarding the assessee, assessee would not like to challenge this law because it is a beneficial for him. And even if it's there, the court, in my view, is concerned, it is government by its wisdom has enacted the law. So when the law has been enacted by inserting such amendment in rule 89 or 45 as the case may be, I don't think court will struck down this as the case. First of all, the matter will not travel to any court. That is what is my personal view, because you get now on the contrary, there is a relaxation coming up. The more time has been given to you for filing the refund. So this is what is my view, ma'am, on this.
Sir, my point was, see, under subsection 14 of section 54,
yeah,
date in such case, because 77 will come in clause H of that subsection, which is any other case, the date of payment of tax.
Correct.
So they have clarified that it should be the date of payment of the tax when you hold it, I mean, as an interstate sale. Correct? That is the later date.
Correct.
That's what they have explained here. But the point is, supposing I miss the bus there also within 2 years, I'm not able to make that application for some reason.
Correct.
So happens that I have paid the tax on the same transaction twice.
Correct, madam.
Will that be, considered as unconstitutional? That's my point.
Correct. If it is, see, you are on the point that transaction, government cannot recover tax twice. So once you have paid twice, the government cannot retain. Yes, I do agree, but to that extent, the amount will go to the welfare fund. Because if you have legally claimed within the time limit provided and complied with the provisions procedure, then refund will come to you. Otherwise, it will go to the welfare fund, and that is what the section 54(8) say. I do agree that government cannot retain this as a tax. But for you a refund, you will have to comply. That is there, and now this being a relaxation. So constitutionally, I don't think there will be any problem with my limited understanding. You might not have got the refund because you have missed the bus, which I think now the door is open for you by virtue of this notification.
Okay, sir. Thank you so much.
Thank you.
There's one more question.
Yeah.
Renting and hiring are two different concepts. What is your view on this circular stating that hiring includes renting of vehicle?
I think I don't have a case law handily available, but I recollect in service tax regime also, there is a case law to cover that renting and hiring is a one and the same to that extent. Right now, handily, I don't have a case, I'm not able to recollect the case law. Now, my personal view is concerned, there are two things. We are talking about the vehicle. Normally, vehicle is concerned, which is used for the transportation of a human being. In that case, there are two things. Either you ask for a service where driver will come with a vehicle. So this is a normally transportation of a passenger. You can say tour service it is. So there is no question of hire or renting comes into play to that extent. But when you take a vehicle on this thing at your own self-drive, there could be a renting or hiring company. Normally, lease pay company gives the vehicle, etc. Those all questions may come in that case. Now, the question you are asking, how far this renting and hiring, whether it is a different or no. Yeah, it's a thin line of difference to that extent. But the intention of the lawmaker by giving that exemption to the transaction of hiring, why this notification? Because similar exemption in past in service tax regime was also there. I'll try to forward the case law the moment I get through it. But here it has been clarified that basically when you are providing to the government, what you are trying to give is it is a hiring only. You give it to them, and thereafter they operate the buses by paying you the amount by way of a consideration in one or the computed in a different way. Now the words are concerned, the clarification talks about that hiring is a much broader term as against the renting is concerned. That is what has been clarified to that extent. Let me tell you honestly, myself was irrespective of this circular, since there was a similar issue crop up in the old service tax regime, I was carrying this view that yes, renting is covered within the hiring. One minute, I got this thing. It is a Shiva Travel Uttarakhand High Court this year. Citation I don't have. Shiva Travel Uttarakhand difference. You have cited? Yeah. What is citation? 2014 TIOL 2039. It is 2014 TIOL 2039. It is a High Court Uttarakhand 2014 TIOL 2039. So there is there Uttarakhand High Court has an occasion and they are distinguished and they are trying to say, so what is hiring and what is renting is explained in that case, and there the benefit was also given under old regime of service tax. So if you want, you can go through that notification. In my view, this transaction and this circular is concerned bona fide. I am concurring with the view of the circular. Of course, it is benevolent in the benefit of the assessor.
Thank you, sir. I think we have already exceeded a lot of time, and you will also be having some other commitments, sir. I will now take up the task of vote of thanks. Rajiv, sir, we are very happy, first of all, to invite you to GSTPAM and have you speak on a topic on the recent amendments under GST. I think we are fortunate enough for explaining this amendments in detail, and all of us had real insight on the pros and cons of the amendments, not just the amendments. And thank you so much, sir, for giving us this wonderful presentation and sharing your knowledge with us, sir. I will request everybody to welcome sir's session with a loud round of applause. Thank you so much, sir. And
thank you. Thanks to the organizer for having given me an opportunity, and my apology for exceeding the time once again. Thank you, Rahul, for your wonderful questions. I hope I could do little justice to that. Thank you.
Sir, pleasure is all mine, sir. In fact, ours, the association has benefited from your extension of time, sir. Thank you so much for this.
Yeah.
And
thank you.
I also thank all the participants for spending their time and giving, asking questions and participating actively. I'm sure many of us must be having some other questions also, but due to paucity of time, will not be able to take it up. You may mail it to us. We'll forward it to sir and try to get the answers for that. Thank you so much, sir.
Thank you. Thank you.
Thank you, Raju. Thank you so much.
Yeah, thank you, Alok Bhai. Thanks to everybody, sir. I could not spell everybody's name. Thank you to the organizers. Thank you.
Pleasure. Pleasure.
Thank you. Thank you, sir.
Thank
so
you.
I think Raju Bhai, after 2 years, will back to GSTPAM, if I am not mistaken.
But Alok bhai, I know that during your tenure, you will not single person. You will ensure that each and everybody will be covered in your web.
Yeah. That's my dream, that everybody should be covered.
Yeah. I'm really proud of you and doing great job. Keep it up, sir. Keep it up.
Thanks, sir.
Thanks.
Thanks to become a live member, sir. I'm very happy.
Yes,
You
I was going to say that.
You have a major role to play now.
Yeah, definitely, sir. Thank you very much.
Thank you so much. Pleasure and
Hello, sir.
Thank you.
very much.
We'll
Thanks.
end the webinar.
Thank you.
Thank you.
Thank you very much.
Thanks, Adi.
Bye.
Thanks, Rahul. Thanks, Sejal.
Thank
Thanks,
you,
Alok ji. Thank you, Rajiv ji.
Thank you.